Right, what is up? It is Monday. Welcome to the Algo Factory Public Live Lab. So this is where we just take a look at all of the charts. Anybody can come on and ask questions. If you're watching this on YouTube, please like, subscribe, hit that notification bell. If you're watching this on X, please like and follow. Helps us get a lot more content out to you, helps us with the algos. And you can ask questions in the comment section and we'll be able to answer those questions. Our private members do have priority, so we'll answer their charting questions first, or any questions for that matter. Don't ask me what the meaning of life is. I got no freaking idea. All right? I got no idea. What the winning lotto numbers are? I got no idea, but I don't need them because we're Algo Factory. We make our own luck over here. No such thing as luck. We create algos. And by the way, we're going to take a look first and foremost. We're going to talk about more about what we do towards the end of this half hour, but I'm going to jump right in. We're going to take a look what's happening at this. We're going to take a look at what's happening this week right now. Because when you trade, you have to know what's happening on the calendar, especially when you trade like crypto or you're trading forex. What you want to know is what's on the economic calendar because these are currencies. And even in the stock market, it makes a difference, right? So let's share the screen. There we are. And the gorilla will be joining us. He'll be joining us for our private session today. That's what he told me last night. So those of you who are over at Algo Factory, the gorilla will be on today, according to what he said last night. So unless something has changed, then that is the plan. Okay, so today is JPY news, monetary policy statement, BOJ outlook report, BOJ press conference. I would not be trading the JPY, any JPY pairs today. And it's always tentative with them. They're if you look on their assist tentative here, and they never like have a time, which is really strange because the Japanese are very much like, they're very punctual, they're very respectful, all these things, and they always adhere to calendar, and their trains are super on time, and very much like the Swiss in that manner, and the Germans for that matter. But apparently when it comes to their monetary policy statement and their outlook report and their press conference, it's not the case. Maybe it's their way of showing that, hey, we don't mess around, and we don't try to mess with the markets. We don't manipulate the markets. So we don't have a certain time when stuff comes out. It just comes out when it comes out. And that way people don't speculate too much. I would totally believe that. I have a very tremendous respect for the Japanese culture. Okay, so let's see here. I'm going to go ahead and share a link right now over in the Rogue Discord and a couple other places. I'm going to share the link at Algo Factory. Okay, links are going out. So the Bank of Japan has, in fact, the most recent show that I did, second most recent. Let me take a look at my titles here on my videos. I did a show, Is War Coming? Watch this before you trade oil or bonds. And I did that on, 2 days ago, right? January the 20th. You go onto the YouTube channel. It's got like a mafiosi guy. I had to edit the picture of the thumbnail because he actually, in the original picture, he's got like a gun and a cigar. And apparently, like smoking and guns are both no-nos on YouTube thumbnails. So I had to edit those out. But it does talk towards the end, I'd say about 75% through of the 30-minute video. It's a pretty long one. It talks about the JPY and its place in the economy, in the world fiscal economy, right? And it's a very interesting thing that JPY is. Very interesting. So, okay. Live. Okay, so if you want those details, go watch that video. It's a complex video, but I do what I can to make it simple. And I explain how basically Japanese yen is a giant carry trade. So the Japanese are basically on what's like QE infinity, right? So they've been doing quantitative easing forever, and they print a bunch of JPY so they can shove a bunch of debt into the world market and trade it for more expensive currency, and then they'll use that currency to invest in foreign and domestic equities, probably more than just equities, but a lot of equities. So it is quite a thing. And for that reason, they have to keep it weak. So the JPY against the dollar is always going to be weak. So it's, at least for now, at least as long as that policy is in place. So the JPY is always going to be reapproaching a high. So let's go ahead and take a look at that. I want to show everybody kind of what that looks like on the screen on the high time frame. And let's open this up. Okay, so what we're looking at here is this is a monthly chart. This is a very high time frame chart. What that means is that each of these candles that you see on the screen is 1 month's worth of price action. So we're going to zoom in on this. And you'll notice that over time, the JPY has gotten higher and higher and higher. From 2012, which was a very key time in financial history, right? 2012 was the bottom of the market after the great financial crisis in the US. Japanese yen got weaker, weaker, weaker. And it continued to get weaker and weaker and weaker here. And the correlation is such that when equities go down, JPY gets stronger, right? So in the US equities market, when US stocks start to fall, you'll see a lot of money flowing into the yen, which is when you see the USD JPY go down, right? In fact, if the JPY tends to be like a what do you call it? A safe haven, if you will, right? So, for example, in 2008, you had the great financial crisis, and prior to that, you see the Japanese yen actually take a tumble. Take that back. It gets really strong. Remember, this is the USD JPY. So when you have a currency that's USD and then JPY, JPY is on the other side of that, right? So you're looking at the dollar in terms of the Japanese yen. So when the Japanese yen gets weak, this dollar gets strong in comparison and the chart goes up. But when the Japanese yen gets strong, then the dollar is weak in comparison and this goes down. And when stock markets start to have a problem, the Japanese yen gets strong. And the actual equities market started to crash in 2008, but it looks as if perhaps looking at USD JPY might be a little bit of a predictor on the entire equities market falling. So let's look at SP 500. And let's see if we can see whether or not perhaps I'm going to use my futures SP 500 map here. I'm going to look at the E-mini. Let's overlay USD JPY. Got a dry throat here. Let me take a drink. Okay, so I wouldn't, maybe not a future teller. Oh, no, that's a lie. Look at this. Okay, so this is interesting, folks. We might just have identified on a higher time frame what might be telling us the future. Well, I sure hope that cough button worked because that was nasty. I took like a powdered supplement before the show. Now I'm like dry throat. Look at this. You have the JPY take a hard spike, but it's hard to identify. Like, you're not going to identify that until the low is broken per se. So it might be kind of like you get a clue that the stock market is about to have a problem when the JPY starts sliding. So this is going to go back to 2007, June, right? And this is when the stock market, or this is before the peak, right? The peak of the stock market, at least the SP 500, and I'm sure this all makes sense, was, as it always is, or almost always, is for large contractions in the stock market. October tends to be when they crash it. And some people think that it's the whole elites using, astrology, because October's in Libra, and there's something to do with Libra. I don't know the exact I don't know the exact reason astrologically. I'm not that deep in astrology. I know a thing or two, but long story short, something to do with astrology being in Libra. And right before, what comes after Libra? Is it Scorpio? I think Scorpio is the killer. If that's the case, I don't look, whatever the case is, we're not going to get into astrology like right now, but October, it tends to be when everything crashes. I think if we go back to 1929, we'll find that the Dow crashed in October. We might have to test that. But for now, what's important is that the USD JPY, the JPY gets strong. And in this case, it got strong 5 months before the crash, which is really, really kind of remarkable, right? So remember, when the USD JPY gets strong, right, that means that when the JPY gets strong, it means the USD JPY gets weak. Okay, so you see here that the JPY just gets strong over and over, and then you see these contractions in the SP 500. Here's another one. JPY gets strong in about 2015 May. And then you just have some quick contractions right here, but they actually managed to hold up the stock market at that point. Might not have been time to allow for things to fall. But yeah, you can see it here. I mean, these little contractions that you see, JPY gets strong, stock market takes a break. JPY gets strong, stock market takes a break. This one would have been really hard to identify, right? Because you need at least a month or two to identify the JPY getting strong. It looks like this contraction did not get foretold. This is in 2022. We don't really see this contraction happening with a JPY stall out, a JPY strength. We don't see that. This is actually a dollar strong contraction. This is when the interest rate starts to get hiked. So, dollar gets strong because interest rate hikes. You can pretty much predict that. But this one here is pretty clear. You have JPY getting strong, USD getting weak, and then you have a contraction, S&P going from 3,400 down to 2,100. That is significant. That is huge. 34 to 21 is 13. That's like that's like 35% contraction, and that was COVID, right? So the JPY started to get weak 1 to 3 months before COVID. Did somebody know something? You know what I'm saying? You know what I'm saying? But you look here, I mean, that's pretty cray. It's pretty cray. I can tell you right now, JPY has been very strong. I'm sorry, very weak. USD has been very strong compared to JPY since 2021, right? So that's dollar strength. And I think that has to do with the ability to buy strong dollars. They got to keep the JPY super weak to take advantage of that carry trade, right? You have super cheap yen, right? They can just print that ad infinitum. They can print that as much as they want to so far. And then they can use that to buy strong dollars and use those strong dollars to buy equities. So it's a great way to invest. And I think that, again, in that video that I did a couple of days ago, looks like I got a profit taking here on my gold. I took a gold trade before the show, got a little bit of profit. Let me take care of that. I'm just doing a measured situation here on gold. Nice little bit of profit. And move my stop loss to 2023.85. This was such a tight management trade that I didn't share it with anybody. 2023.85. 2035. But yeah, just made a little money on gold right now. But this is what you're seeing right here is a weird kind of trade. There's a decent chance it's going to pull up and grab that profit right now, and that's fine. But what I do is on this particular trade is I section it out into 25% blocks in the profit taking because it's such a choppy move down. So I make sure that I don't lose money. So I just kind of take a larger trade, and then as price moves at the 25% profit mark, I move the stop loss to halfway to that. And then as price moves, say, to the 50% mark, see, there it is. Actually, that was just me moving it. That's not a profit take. This trade is still on right now. But long story short, as price moves to the 50% mark, I move my stop loss to the 25%. As price moves to the 75%, I move the stop loss to 50%. And that's just a specific kind of algo for super choppy, hard trading. Like looking at moves down that are going to be stubborn. And that way, in case the stubborn move down decides to turn around because it's so stubborn, at least my profit is locked in. And I could take a lot of those trades in a day. This is inverse risk to reward proportionate, but I have done numerous back tests on it. And this is one of the few trading algos where I can have an inverse reward ratio, right? So basically it's like an average of 0.38 risk to reward or something like that. But I win like 90% of the time. So it's great way to do that. Look, all that talk that I just did, that over in Algo Factory, you probably can learn what all those things mean in like a very short time, like less than a month. It's this Algo Factory thing to build these trading methods it's not that big a deal. It's super simple. And again, we'll talk about that a little bit closer to the end of the show. I do want to take a look at Bitcoin. And I haven't even looked to see if there are any questions in the chat. There's one comment here. Great morning, Truckface. Good to see you in here, sir. Thank you for dropping by. Always good to see the Truckface in the house. Let's go ahead. Let me see here. And take a look at Bitcoin. I know a lot of people are going to want to see what Bitcoin looks like right now. So I did a lot of talking about USD JPY. And again, just go back to that show. About is war coming, so on and so forth, and you will learn at least what I think is going on with is war coming and how might that affect finance. Okay, and that gold trade just took profit. That's good. Made a little bit of money on that. Happy with that. Let's see, I took actually a pretty good sized trade on that because you kind of have to make any money on those. So if you're an Algo Factory, you want to know more about that, I'd be happy to show you like during the private show how that profit taking works. Okay, so this is not my normal Bitcoin chart. I have Bitcoin diagrammed out. And I told my private group last night that I thought Bitcoin was kind of getting weak and that we might see it I guess all my drawings are gone somehow. That's concerning. All right, well, it doesn't matter. So it's always good to start with a fresh chart anyway. I don't know how much time we're going to have to sit and draw it, but let's see here. We got a range that is pretty well defined at this point, and price has been in this range since the beginning of December. It is now the mid to end of January. Yeah, we're almost to the end of January. Holy crap, where does the time go? 2024 is almost like 8% over. When price last night hit right, and this is on the daily chart, all these candles that you see are about 1 day's worth of price action. And when price hit here last night, I told everybody in the private group, I think Bitcoin's going to become weak. I think we might see Bitcoin start to drop into the next phase of its we'll call it price discovery, because we just had this big, huge move up, and it certainly hasn't gotten to all-time highs. It's not like a high time frame price discovery, a pure price discovery where it's uncharted waters. Bitcoin certainly has been here before, but obviously we've had some pretty interesting market dynamics. We've had the ETF, we've had, all that whole conversation. And I think that Bitcoin is going to drop, and I think it may drop to grab liquidity from this area down here. So let's go ahead and first, before we do anything, take a look at what the liquidity profile looks like. Okay, we're going to use the Kingfisher.io, and you can get free credits by doing what I'm doing right now. I also think it's totally worth paying for the Kingfisher.io. It's a great service. I do have a referral link in the description, and it'll give you a discount if you want to actually pay for the Kingfisher.io. But, if you want to just give it a try to see if you like it before you pay for it, what I'm doing here is like a fraction of what they do. I'm just, and I'm not going to do this again if it keeps hitting spin again. All right, this is stupid. Let's go ahead and just grab a liquidity profile. Liquidity profiles are key because you get, whoa, hey, what's going on here? You get to find out where people's liquidations are, and where people's liquidations are matters because that is where the market tends to go, right? And right now there are a lot of liquidations sitting up at 45,700. Will price make it up there? Well, here's the way that it works for me and my back testing is that price will only move in the direction the charts favor. And as of right now, it could go either way. There is a fair amount of close buy liquidation at 42.2 to the upside, and that's actually a block between 41.7 and 42.8. So let's mark that out. 41.7 and 42.8. So 41.7 and 42.8. This is close by. This is your easy kind of target. And these are people who've gone short based on the current charts, right? Based on the current trade, this is probably mostly people who have gone short and they think price will head down out of this consolidation and then go down in this direction. And their stop losses are where that square is right here. And then you have a bunch of stop losses up above this range that I've drawn out, and that's going to be sitting really between 44.8 and say 45.7, but heavily at 45.7. So we can draw the box 44.8 to 45.7, but know that there's a ton of liquidity right at the top of that, a lot. Now, right now, the charts, in my opinion, do not favor a move up. That can change though, because what we've seen in the pattern here is a potential double bottom, and we're going to draw that out in a minute. First, I want to take a look at the liquidity to the downside, just in case price decides to drop out. You have a little bit sitting at 39.8, and you have some at 37.2, but there's a decent amount here at about 36,000. So 36,000 is where I would look to the downside on the chart just to see how that lines up. And that's way down here. That's pretty far away. And it's, I mean, look, just by distance and size, I would expect this block to get taken out first. But the charts have to favor a move up. And as of right now, let's look on the algo really quick. It doesn't. As of right now, the charts favor a move down. However, what we're looking at is a double bottom, and it's at the bottom of a range, and the range has not yet been broken. So it does seem to me like it will get broken to the downside, but I am not going to short until we do see price drop out of this range. I do not dive into shallow pools, right? If it's going to short, I want price to break and close below the bottom of that range. If it breaks, look, it's Bitcoin. If it was another asset, I might wait for it to close in the daily, but it's Bitcoin. It moves really, really quick. So I'm willing to take the loss. If price breaks out of that range and it ends up being a deviation, then so what? It is what it is. Like if it breaks out and it closes even on like the hourly, I might take that trade. It just depends what the charts look like. Ideally, let's make this a little bit easier to see. Let's zoom in. Okay. The ideal trade is just Bitcoin sometimes doesn't allow for entries, it just moves so quick. So if price does break and close on a decent time frame, like maybe a 30-minute or something like that, I might take a risk and short right here and take a short that looks like this, right? I might take a risk, and if I lose, I lose, you know? Ideally, Bitcoin actually would pull back up and then head back down, right? And then that would be the trade to take. But Bitcoin a lot of times does not allow for that. Bitcoin will just get crazy and push down really hard. Now, if Bitcoin cannot make it below, if it cannot close below this double bottom, and the double bottom here is going to look like this. I know we're going a little bit over, folks, but that just is fine. I don't care. Bitcoin might, if it can close below the bottom of this wick, close below 40258.9. On this is on KuCoin's exchange, might be different elsewhere, but if it can close below that on say like the 30-minute or above, that's when I might be a little more comfortable taking that trade, right? If it doesn't close below this, especially the current candle, what we're looking at is a double bottom, and that double bottom, if price bounces upward from there, it actually would very likely take out the liquidity in this square right here and quite possibly go back up to the top of that range and even go back to grab this liquidity up here before it moves down. So Bitcoin is a wily beast, and it will move in ways that you don't expect. So all that is good. And plus, the market hasn't seen a ton of follow through lately. There's been a lot of consolidation since the ETF, move has kind of burned out. just not a lot of breaking out of ranges. It's just, you know, you have this little breakout here on this tight, small range, and then you kind of got this breakout from last night, which would have been a nice one to catch if I'd been awake. But that said, you know, I got to see how this plays out. So I'm going to go ahead and open this up into the private room. So look, there is a QR code in the top right-hand side of the screen. And if you zap that QR code with your phone, or if you just go to www.algofactory.tech, what you will find is that you can go to our website and you can see what we do, and we help people become traders. You can start from scratch with us. Okay. So basically what that means is, excuse me, you can not know anything about trading, and we will give you the basics, and you can come learn about trading. Building algorithms is not some fancy thing. In fact, there is a video on our YouTube, and it's called What is an Algorithm? And if you go check that out, you'll find out that you already use algorithms every single day. They are a simple concept. The word algorithm comes from antiquity. This is not some fancy thing where you have to know how to code. It's just a way to teach yourself how to trade. And then if you do want to trade in a way where you can build your own trading method and have a coder code it for you and attach it to your trading account, then you can very safely test that, maybe using like a demo account, fake money. And once you have that all kind of tested out and you know it's going to be successful, you can have that trade for you while you're out going about your day. It's a process. It's not something that is going to be guaranteed to make you money overnight, because nothing is. If anybody ever tries to tell you, come trade my program and you'll get rich tomorrow, like that's probably going to be a scam. Bigot, I'm just seeing your request. We'll get to you, bro. I'll do your request over in the private group. So the point here is that it involves work, and just like anything worthwhile involves work. But one of the reasons people fail at trading is because they use other people's methods and they don't test them. Now, if you want to use somebody else's trading method, that's fine, but you have to need to know how to test it, right? Now, the problem with that is that it's not your method. You didn't create it. Your personality is not imbued upon this trading method, this algorithm. And that's a big thing in trading. I know a really good trader. His name, he runs the No Nonsense Forex channel on YouTube. And they're of the popular opinion in trading that trading has a lot to do with your personality, right? So what kind of trading you do has to do with who you are. And so if you develop your own trading method, that is going to inherently have your fingerprint upon it, and you would be more likely to continue to trade, because there will be times when even the best trading method is going to have some drawdowns. And if that does not belong to you, you're going to quit trading most likely. When you lose a few in a row, and everybody does, even with the best method, you're going to be like, hey, I don't know about this. But if you create it, you test it, you're going to see the history, you're going to know that you go through the occasional drawdown, then you'll be able to stick through that psychologically. And the psychology of trading is perhaps, I'd say, one of the key components. You could have the best method in the world, but if you do not have your trading psychology down, you probably will lose trading. You have to have that component down. And the big secret with Algo Factory and my trading method is that building your own trading method solves that problem. You can read books about trading psychology, you can do all these other things, excuse me, but if you just really want to get it done on your own instead of going through years of trading and years of losing, as most traders do before they're profitable, because that's what it takes to become psychologically strong, you can simply just build your own method, and that probably will shorten up that process where you become psychologically ready to be a successful trader. And that right there is the big secret. Come over, algofactory.tech, zap that QR code. We'd love to see you. We're over on X as well, so go find us there. Talk to me there, talk to me here, talk to me everywhere. We hope to see you soon, and we are going over to the private group.